Hello, everyone. Thank you for joining us on this Wednesday morning, and welcome to this Specialist Trading educational presentation, where today I'd like to talk to you about identifying a downward market in advance. Now, I know a lot of you aren't really concerned about identifying a downward market because, after all, the market's been kind of firming up. The last couple of weeks, we've almost gone straight up in some stocks and some markets. And it's at this time that most people say, well, I'm not concerned with a down market. I mean, things are looking pretty good, and my stocks or futures or whatever I'm invested in are starting to go back up. So why would I concern myself with a downward market? Well, it's because of that very reason, because most traders don't really think about it until it's actually too late. And by the time we head into a strong downward market, you've given away practically all the profits that you made while you were going up, and you don't know what to do anymore. You realize that the profits are gone. Should you hold on? Should you get out? It's too difficult to figure out because you didn't really practice or rehearse for this scenario. See, this is what most traders do. As any market, as we look here in this chart here, is going up, traders find it easy to trade. I would venture to say that the majority of all trading methods and techniques and strategies do very well while the market's going up. So it's for this reason that most of us just concentrate on that, right? As long as the market's going higher, we all feel very successful, very confident. And basically, all you have to really do is throw a dart at the Wall Street Journal and pick whatever stock or future or currency pair it lands on and just invest in that, because it will eventually go higher. I even have heard people in the past say, markets never go down, they just go up. Well, that may be true until this happens, right? Once this happens, everything goes out the window. Nothing seems to work anymore. The profits that you made that took so long to gather and to invest and to really accumulate are all gone in a matter of days or weeks. And now nothing seems to work. You don't really understand what's going on, and you haven't really prepared for a scenario like this. Okay. Now, this is an example of the spiders. That's the ETF that represents the S&P 500 index. So as you see right here, in this 1 month period that it went down, the spiders fell over 120 points. Now, if you say, well, Steve, I don't trade the spiders, I look at the Dow, I just mainly follow what the Dow Industrials are doing. Well, that's comparable to the Dow falling over 10,000 points in a month. And that's what happened just a couple of years ago when the pandemic hit and caught everyone by surprise and the market fell out of bed. So let me ask you this question. When you're feeling terrible like this, when you're looking at this, do you ask yourself, say, should I be trading or not? I mean, everything I made, I'm giving away. And in fact, most likely you're sitting there with your significant other and saying, wow, I don't think we can afford to trade or to invest anymore because we've lost so much money. And it's just not working the way we thought, and it's not getting the type of results the way we thought. Well, here's the question I want to ask you. What if you knew in advance that a down market was just about to begin? Now, remember, nothing is certain or 100% guaranteed in the markets, but what if you had a high probability of certainty that not just a down couple of days, but a down strong market was just about to begin, perhaps even a bear market? Do you think that could help your trading? Well, that's the reason why I want to talk to you today about a new course that we're putting together that specifically deals with bear markets. Now, here's what I'm going to be teaching in that course. If we look back at the same chart we looked at earlier in the spiders, okay, I'm going to be sharing with you techniques and methods that I've never taught before that actually would have identified an aggressive down market setup right here, just off that bar. And if you weren't that aggressive as a trader and you wanted a little bit more assurance, well, you could have been aware of the more conservative setup that was right here based on this bar. Now, at this point, you could have made the decision. Well, if I trust and believe in these techniques, well, most likely we're going into a strong downward phase. So maybe I don't want to buy any more of what I've been purchasing. Maybe I want to sell what I've already owned, or maybe I want to sell part of it, or at least move my stop up if this does go into a very strong downward market, okay? And as you can see, it did. So these were tremendous signals in advance that warned of the really strong market that was impending, that was coming upon us. Now, what if you're at a little bit more aggressive trader and you say to yourself, well, Steve, I do not only want to know in advance, but I'd like to kind of trade these strong down markets. Well, in the new course that I've structured with Pro Trader Strategies, we'll actually teach you how to trade these strong down markets and generate signals like these right here as the market is going down. And everything that we'll be teaching in the course and everything that you will be applying and using is easily accessible on our platform, the PTS Primo charting platform. I developed the Pro Trader strategies that helps you identify these down markets in advance. So thank you once again for joining us on this Wednesday. My name is Steven Primo. I'm the president and founder of Specialist Trading. I've been trading now for 45 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, a specialist doesn't mean that you're more special than anyone else. A specialist was someone, if you ever Google those pictures of the old exchanges, the stock exchanges where you had the paper on the floor and guys screaming and yelling with these weird hand signals, specialists were those traders or market makers that were behind those large wooden booths that actually bought and sold stocks. So if you wanted to purchase or sell a particular equity, the floor trader taking your customer order had to walk up to the trader who specialized in making a market. So I was a specialist for, once again, 9 years. I was a specialist during the crash of 1987 and the bull market that followed. So I've traded just about every market environment you can think of, straight up, straight down, sideways markets. And on top of that, any trading strategy, any trading technique, any method, could be something you think, oh no, Steve, this is brand new. Most likely it's been around before, it's just been rebranded, and I've traded it. So in my 45 years of experience, I know what works in terms of consistency and I know what doesn't. So about 13 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders around the world so that they could make their own trading decisions, so that you would no longer have to rely on some convoluted indicator that you have no idea what it's based off of, or rely on some guy on TV or in a chat room that's supposed to have all the answers, but isn't really giving you the type of results you want, or have to rely on any type of news or information or economic reports that you have no idea what they mean, just hopefully they're good or bad so you can make your decision. What I teach are sound fundamental techniques that are based on one thing only, and that's the chart in front of you, based on market behavior. These are the things that have stood the test of time, the things that have sustained my market trading career, and hopefully they'll be able to do the same for you. Now, before we begin, I tell you a lot about our bear market course. We are required by law to share this with you, so please take a moment to view a disclaimer. I'm going to show you a lot of performance results using and applying what we're going to be teaching you in the course, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are an educational company, first and foremost, all examples are strictly for educational purposes only. Now, a lot of students or prospective students always say, well, Steve, is there any way to get more education daily? Sure there is. You can contact us on Twitter, and every day I post different information, such as signals that our strategies have generated. A lot of our different methods and techniques, examples are on there, as well as financial wisdom, things to help you accelerate your trading process, and also to give you a little bit of insight into how we teach and what we believe in trading the market. So there's our handle right there. If you want to follow us on Twitter, please copy down that handle. Now remember, we are, as I stated in the opening statements, an educational company only. We're not here to tell you what we think the market's going to do. In fact, that goes entirely against our philosophy of education. Think of it, the entire industry, as I always say, is based on someone or something telling you what to do. How do you make your trading decisions? You make them basically based off of going to a chat room, reading a blog, listening to the guys on TV, waiting for the earnings, waiting for the economic reports. These are all outside sources giving you a clue or an answer, telling you what you should be doing. You see, that couldn't be further from being a successful trader, in my opinion, because I used to do those things. 45 years ago, I was taught and trained the exact same way, and it didn't work. And there were a number of traders I knew where it didn't work for them either. So the only things I found that work are the things that my mentors taught me, and these are sound fundamental techniques and education that have stood the test of time. It's our opinion at Specialist Trading and Pro Trader Strategies that you will only become a consistent trader if you only make your own decisions, not listen to some guy on TV, some news announcement, and especially not to listen to some guy on a webinar tell you what he thinks the market's going to do. That's why we don't have chat rooms at Specialist Trading. We don't have signal services. We're just an educational company educating you so that you can make your own trading decisions. As I always say, a good mentor does not trade for you. He teaches you how to trade. And we teach you how to trade with a specialist edge, the same edge that was taught to me and that has sustained me now going on 45 years. Now, This is a class today, and we're going to begin in just a few seconds, but a few announcements. I'm sure most of you have heard me say this before, but please, for the people that are new, we have a good crowd here today, and I'm seeing some new faces, some new names. So if you're new to my presentations, please remember to disable all cameras and all microphones. This is not an interactive presentation where we're going to show our pictures on the screen and talk over the microphones. This is just a static PowerPoint educational class, okay? Now, since it's a class, I want you to ask me as many questions as possible, but please wait till the very end. I have a lot of slides to share with you, and I don't want to stop at every slide and answer a question. We'll be here far too long. So please, if you have a question, wait till the end. I promise I'll get to all of your questions at the end. The last question I will answer, the only one in review here is this being recorded? Yes, it is. We record all of our webinars. So if you have to leave early or if you have any technical issues, don't worry. Each and every one of you will be sent a link to this recording. Okay, so not to worry. You will be able to watch this in your leisure whenever you like. It's yours to keep. All right, with that said, remember, disable all cameras and microphones, wait to ask the questions, and let's begin today's educational presentation, okay? Now, I'd like to start out by a phrase that is something very akin to the boxing world or all sports. And this is something many of you may have heard, but it really pertains to not only to sports, but also to the markets. Because it's been said that everyone has a plan until they get punched in the face. That was Mike Tyson who said that. But think of it, any athlete, any type of performer can study and can rehearse, can practice for months, even years. And the minute you get punched in the face, or the minute something goes wrong, an injury, anything, that's it. Everything goes out the window, right? All of a sudden, you're in survival mode. You're just trying to survive, and everything that you practice and train for weeks goes out the window because you're just trying to stay afloat. I know this relates to the boxing world. I'm sure some of you would say, well, what does that have to do with me? I trade or I invest. I'm not a boxer. So how does that pertain to me? Well, in all actuality, it's the exact same thing, but we would just have to change the wording a little bit. So if we're talking about trading, the phrase would read something like this: everyone is a genius as long as the market is going up, okay? Now think of it. When the market was going up this past year, straight up, everyone was making money. Everything was fantastic, okay? Think about Bitcoin years ago when Bitcoin was going straight up. All of the investors, all of the traders in Bitcoin were making tons of money. They said it's the easiest thing in the world, just keep buying it, right? Then what happened when the energy fizzled? What happened when it ran out of steam? Okay, it's harder to make money, right? It's more difficult. In fact, some people that made tons of money in Bitcoin or other markets have already given it all back in a short amount of time. So it's just like getting punched in the face. So we have to understand how to prepare the same way a athlete would, how to prepare for getting punched in the face. And that punch in the face is basically when the market decides to change the energy, when it doesn't go straight up anymore. All right, this is extremely important. So because of this, we've developed Pro Trader Strategies and Specialist Trading, our new Masterclass series. Now, this is introducing the Masterclass series where we're going to be discussing how to trade bear markets. If you're familiar with our Masterclasses, we cover specific topics. In fact, in the past, we've covered topics like trend following, entries, all about exits. And these are specific categories or details in ways in which to enhance your trading. We take specific categories and we talk about them. We're not focusing so much on strategies. We're not focusing so much on those type of courses, which are our colleges. We're really taking different aspects of the market and going into detail and teaching you how to trade them or how to work along with these certain environments. Now, with this particular one, we're talking about how to trade a bear market, because once again, these are usually the things in our master classes that people have strong difficulties with. And I would venture to say that most traders have no idea how to trade a bear market, right? In fact, most traders, it's been my opinion, my experience, that most traders never really short anything. All they do is buy. And what that's really telling you is that, I can only deal with the day during the daytime. The minute it gets dark, I go in my house and I shut all the doors, right? That's silly. That's the same comparable environment that you would be doing with trading. But there's just as much money. There's just as much action in a down market as there is in an up. You see, real traders don't care if the market's going up or down. Real traders are just concerned with being in sync with the river, in sync with the market. So that's what we're going to be trying to explain to you and teach you in our new masterclass series, how to trade a bear market. Now, as you can see here, we're going to be sharing with you never before seen or taught techniques. These are things that I've experimented with for the past 3 to 5 years that I really never shared in a course or in a college, and that I want to share for the first time because they specifically deal with downward markets. We're going to emphasize basically a bear market before the crowd does. We want to identify that before the market turns around and everyone knows that you're in a bear market, because by that time it's usually too late. Okay. And then once you learn these tools, you'll learn how to trade them as well as protect your long-term investments, your portfolios. But here's the main thing about this. This is a 2-part live course. So we're going to break it up into 2 specific sections. So that's what I want to talk about today, just to show you what exactly we're going to be covering, and then to share with you some examples of what I'll be teaching you. So here is section number 1, okay? The first part of the 2-part series. In section number 1, we're going to emphasize how to identify a bear market in advance. Now, these are not, once again, strategies. These are not entry points or exit points or stop placement. This is basically just a highlighted area telling you, giving you a strong warning or alert that a bear market is most likely to take place. Now, a bear market, I know a lot of people say, well, Steve, isn't that defined as the market losing 20% of its value? Or isn't that defined as something as a 2 to 3 year downward trend? It can be, but it doesn't have to be, okay? We've had bear markets. I mean, for all intents and purposes, 2020 from March to April was a bear market, lasted a couple of months, but it was down so strong and it wiped out so many people's accounts that can be considered a bear market. We've also had some tremendous downward swings. You can also have a bear market in an intraday chart, okay? Because all things are relative. You can be looking at a 15-minute chart and for a week, go down comparable to a regular daily chart, going down thousands of points. So it's all relative. So I don't want you to get stuck in this mode like, well, Steve, this only went down for a couple of weeks or a couple of months. That can't be a bear market. A bear market is really just an environment or a scenario where nothing seems to work anymore and you go into a series of losses. What that really means is that you're out of sync with the downward mode. So what we want to do first is identify if we're going to be going into this downward mode. And this is where these new and innovative techniques that I've researched and come up with really can help you. So let me share with you some examples here. All right, let's look at this chart in GSPC. That's the S&P 500 index, okay? Now, this looks like a nice chart, all right? It's heading higher. In fact, for all intents and purposes, we're in a nice, steady upward trend, right? But I want you to look down towards the bottom in the lower left-hand corner. Look at the year here. 1987, okay? Does that ring a bell to anyone, okay? Because I was on the floor trading during 1987, making markets in stocks like IBM, Waste Management, US Air, different stocks, Textron. And so I was, at that time, aware of something that a lot of people weren't, because my mentors had taught me things that for the past month, I knew that a downward market was just about to begin. Okay, just because of a simple technique I will be sharing with you. And we all know what happened after that, the crash of 1987. Now, the crash actually happened on Black Monday. That was this day right here. This was comparable, I believe, to the market being down 3,000 to 5,000 points in one day. But look, we had a good 3 to 4 days prior to that of the market falling out of bed. So you would have had early alert system knowing that I should be out of the market well in advance. Now, let's look at another chart here. This is of the spiders. That's the ETF that represents the S&P 500. And it's a weekly chart, okay? Once again, we're in a pretty steady upward move, not straight up, but nice uptrendy market. Let's look at the downward time or date again, January 2000. Does that ring a bell to anyone? Okay. I was off the floor at that time, but I was trading accounts for a firm that was specializing in a system that going back 10 to 20 years had never lost any money. It was amazing how much money they made because they just couldn't stop with this system. It was so great. It had been back tested and was all based on an algorithm that no one understood, but we were just entering the orders. And it was at this time that the things I had learned on the floor were giving me an early warning signal that perhaps maybe we shouldn't think so strongly about going long this. Even though someone would have said, well, Steve, this is a support right here. Look at this double bottom. My early warning system from what I had learned on the floor was telling me, most likely there's a downward market just about to take place. And they say, how can you say that? I said, well, I think we should protect ourselves. And they said, no, this system never fails. We haven't lost in the last 20 years. And then we all know what happened. That was a dot-com crash of 2000. Okay. Now, is this company still around trading this fantastic system? No, they went under basically 2 years later because their system didn't perform well once again. Now, we've just looked at a daily bar going back to 1987. We've looked at a weekly bar in 2000. Let's look at an intraday bar. Here's a 5-minute chart of the E-mini futures. This is the market I mainly trade, okay? Doesn't have to be a 5-minute chart, but I like to intraday trade futures. Now, here's the opening, roughly the opening hour of this day. From what I'm going to be teaching you right off the bat, I knew that the downward market setup was in effect. So I knew not to buy anything at this point. There was no reason for me to buy because this early warning system was telling me most likely there's going to be a downward market. And as we can see here going forward, this was the flash crash of May 2010. I don't know if a lot of you are familiar with that, but that's what's kind of like this Bermuda Triangle. And no one had ever seen this before, where all the high frequency traders, along with terrible news going on in Greece and everything convoluted together, caused the market to crash over 1,000 points, from 800 to 1,000 points in just a matter of hours. No one had ever seen anything like this before. But it's funny how what I'll be teaching you would have signaled on a 5-minute chart that you should be out of this market entirely, or at least short, looking for short setups at the very beginning of the day before anything even happened, okay? So we've looked at this one technique that I'll be teaching you. Let's look at another one, okay? This is a monthly chart of the QQQs. Now, this is a technique that I've not shared with anyone, that I haven't taught anyone, but you'll be able to access this. And at this point, you would have seen that a downward market on a monthly time frame, once again, going back to 2000 in August in the QQQs, that's the ETF that represents the NASDAQ index. And look how you could have taken advantage of that over the next 2 years, okay? You see, these early warnings can really help you deal in advance. They're not designed to get you out at the top, but they are really, designed to give you an early warning so that you can make a decision whether you want to continue buying, whether you want to be in the market at all, or whether you want to be more aggressive and start to trade these markets. Here's an example of the QQQs, the same exact market we were looking at, but now we're looking at a 1-minute chart. Because remember, bear markets are relative. It doesn't have to be a daily chart or a weekly chart. It can happen on a 1-minute chart. The QQQs on this chart here are going straight up. But this same technique, this very innovative new technique I'm going to share with you, actually generated a downward market alert right here. And look what happened after that. All the gains were given back within the next day. Now, here's another innovative technique, whereas it uses a tool that you'll only find on our platform that has an uncanny ability to find and search and go out for these tops where the market seems to be running out of steam. As we look at these daily bar, the spiders, the ETF that represents the S&P 500, it's going in a nice orderly fashion upwards. A downward market warning was generated right here towards the high. And look what happened. The market fell out of bed again. Now, I want to share with you some other markets and some other time frames, because once again, what I'll be teaching you in this masterclass is not so much about just looking at the indices, such as the S&P or the NASDAQ. Once again, you can apply this to other time frames, to other markets. For example, here's a 15-minute chart of Netflix. Now, someone looking at this for all intents and purposes would say, well, Steve, that's an uptrend, right? Higher highs, higher lows. But one of these new techniques that no one has ever seen before generated not only a signal here, but another warning signal here that a downward market was about to take place on a 15-minute time frame. And Netflix dropped 50 points in the coming week, okay? So remember, it's all relative. These could be daily bars. And if you looked at this, if this were a daily bar of the Dow Jones, you'd say, wow, that's a terrible market. But It's a 15-minute chart of Netflix, so it's all relative. Here's a daily chart of the Australian dollar, okay? Sure, the market was going straight up, and we have an early warning right here of a downward market. Now, someone could say, well, yeah, Steve, that's just, it broke the uptrend, okay? Remember, these are specifically designed not just to tell you that an uptrend has been broken, and sure, you may have a couple of days, maybe a bad week. This is designed to tell you that we're going to go into most likely a sustained downward move. This is not just a pullback. This is something that you should be careful about. And that would have been wise advice, because in the following month, the Australian dollar fell 400 pips. That's comparable to $4,000 per unit per contract. How about Bitcoin? Okay, here's a 4-hour chart of Bitcoin going back to last month. Now, once again, someone looking at this would say, well, Steve, I still continue to buy Bitcoin because it's going higher. Look at higher lows. This is really strong. Well, with one of the new innovative techniques that no one has ever seen before, I'll be teaching you how to apply it. It actually generated a downward market warning right here based on these bars. And you could have made the decision not to buy anymore, maybe to get out. Either way, you would have had an early warning system in place, because look what happened coming into March. Bitcoin fell 9,000 points. Remember, this is on an intraday 4-hour chart. Okay, so that's section 1. Section 1 is just going to emphasize how to give us an alert and a warning of these downward markets that are most likely going to take place in advance. Remember, it's not guaranteed, but there's a high probability that you're going to get a sustained downward move using these new techniques. Now, if you're a conservative trader, you may say, okay, Steve, that's all I need. You know, maybe I'll just get out of the market entirely, or I'll sell half my position. Or you know what, I was a strong buyer, but after seeing that alert, I'm going to stay on the sidelines now and just kind of hold on, okay? So that's what section number 1 is for. Section number 2 is for the more aggressive trader. That's for the trader who says, okay, Steve, thanks. You alerted me. I'm out of my positions. And guess what? I want to trade this thing on the way down, because there's a lot of money to be made on a strong downward market. I know a lot of students of mine don't like to trade down markets. They don't feel comfortable. That's fine. There's nothing wrong with that either. But we as educators are not here to judge or to tell you what to do or what to buy or what to sell. We're here just simply to educate you, because if you want to trade them, you need to be provided with that education and those tools. So this is what section 2 will cover in the second part. All right, we're going to be going over new and innovative ways to actually trade these markets while they're in a downward phase. For example, we're going to be focusing on how to trade while in a bear market. So let's look at this first example in SHW, Sherwin-Williams. Okay, obviously we're in a downtrend, right? Most traders would be long a position, say, gosh, you know, I'm just hoping and praying this thing turns around. But if you knew you were in a downward market, what I'm going to be teaching you is how to trade it. For example, just one of the techniques would have generated all these signals to the downside that you could have bought puts, you could have shorted, or at the very least, use them to exit your already long position. Here's another technique, all right? Many times, a downward move may be in place, but then you'll get a bounce. Most traders don't know how to deal with that. They say, well, listen, did we just bottom out? Or is this a shorting opportunity? Well, this other technique I'm going to be sharing with you that no one has ever seen, this is something that I've been experimenting with and researching, works very well. Let's say you miss this downward move, and then this happened. Should you buy? Should you sell? Well, this new technique actually generated a sell signal right here on that gap up, where most traders would have thought, hey, we're going to really trend much higher now. And you could have potentially captured all of this to the downside. This is another technique that you'll learn. Never taught before in a college, never taught before in a course, never talked about in one of our webinars. All right, once more, and another example based off of a pattern that I've taught before, but based off of a new and innovative way to apply this pattern. As we're looking at GSPC, once again, this is the S&P 500 index. In 2020, in August, it was going straight up, right? Everyone thought, wow, this is unbelievable. I guess I better get on board. But this new technique generated not one, but 2 very powerful sell warnings right here. And you could have used them to go short, which we'll teach you in the class. And look what happened. All the way back down. All the gains that you made in August and part of September were lost. Okay. Now, market started to firm up again. Okay. Oh, maybe I got in too soon. Maybe it's time to go long. Not really, because another sell signal was generated right here before the market fell out of bed again. This is another technique that I have personally been using for a while to determine these changes in trend. And I'm going to teach to my students in the masterclass for the very first time. Okay, let's look at this example in ROK, Rockwell. All right. Once again, most traders will say, wow, I'm long this and I don't know when to get out, and I would love to short it, but I don't know where, Well, the technique I'm going to share with you would have generated all these sell signals. In fact, you could have gotten short way at the top here if you wanted to. Here's a weekly chart of the QQQs, okay, going back to 2018. Once again, the market's in a nice sustained upward move. You're feeling confident. This is where traders feel they can't do any wrong. Anything they buy goes up. Sure, the market will go down for a day or two, right here, right here, right here, and then it firms back up. So here we are down here, it goes back up. So we might as well buy some more off this. Well, not really, because the entire time you were in sync with the market. At this point, a sell signal was generated using a technique, once again, based off a pattern that I've never taught before. And look what happened. Everything that took months to gain in the QQQs, the NASDAQ index ETF, was lost in just a few months. Remember, bear markets don't have to be 2 years. They're just very strong, sustained downward energy. And on top of that, what it really means is that nothing you've been using is working anymore. Nothing seems to work. So this is where you want to learn how to trade them. Now, in the masterclass, as I said earlier, we don't focus so much on strategies. We don't focus on a rule-based method where this is where you get in, this is where you exit, this is where you place your stop. What we focus on are certain environments, on ways in which to trade or look at these environments, on ways in which to warn us how to apply our different tools. So these are some of the tools and techniques that we'll be using to trade these bear markets. And many of them, I'm sure you're familiar with or have already taken the courses on, such as the PET-D. Well, I'll be sharing with you two very new and different ways in which to apply the PET-D to this. One is a way in which to find out an early warning that there actually is a bear market being set up, and another way is to trade it. Secondly, we'll use a technique that's only found, a tool that's only found on our platform. That's the custom crosshair. This tool I developed with Pro Trader Strategies that is able to see if a trend is running out of steam. It's a very great way to find out if a topping formation is taking place. The other tool is what I've talked about, the fluid buy sell line. This, in my opinion, is the most powerful tool you'll ever need for trading, and I'll show you ways how to apply it in the masterclass. The next is the PTSXT Extreme Trend Tool. Okay, this is our most popular tool at Specialist Trading next to the PET-D because of its simplicity. But I'm going to show you a way that no one has ever seen before that really has an uncanny ability to get you in to trade these downward sloping markets. And then lastly, a tool, once again, you'll only find on our platform, the top bottom 25% tool. This is a specific pattern that we usually use to identify trend. I'm going to share with you and reveal an entirely different way to apply it. It has a great way of finding out if a market is topping or not. These are all the things we will be talking and using in the masterclass. Remember, they're all available on the platform, the PTS Primo charting platform. This is the educational platform that identifies these down markets in advance and will show you how to apply them on the platform. So it's not something you'll have to go out of your way and get a hand calculator and try to calculate for yourself. They're all there, ease of access, one click away on our platform. You just need to know how to use them properly. Remember, as we said earlier, everyone has a plan until they get punched in the face, right? That's the way usually we prepare ourselves. In other words, if things are good, if everything looks good on paper, that's all we have to concern ourselves with. But nobody ever goes into detail thinking, what if something doesn't work right? What if you have to prepare for a worst case scenario, okay? Well, that's what being punched in the face is. That's a downward strong market. The trouble is, we're all taught to fight these bear markets. We're either taught to stick it out or to buy more or just to go through the pain And it's really terrible. And that's why most traders fail, because they don't understand what they're dealing with. But what if we could teach you ways, an early advance warning system to know when one of these is about to take place, so you can either sidestep it or trade with it. All you have to do is change your mental attitude, change your mindset. And where you used to look at these downward scenarios as something negative, something to avoid, you actually look forward to them because you're prepared and you know how to apply certain tools that work well in these bear market scenarios. So ask yourself, do you think these techniques can help your trading if we go into a sustained bear market? I think your answer is yes. So here's what we're going to talk about today. This is our masterclass. Remember, in our masterclasses, we deal with specific topics or scenarios or categories within the market. And we're going to be talking about our two-part live course, okay? We haven't decided yet if it's going to be two specific different days or if we're going to break it up and just have two specific categories in a long one-day class. But either way, it's going to be different things that are taught that have never been seen or taught before. These are techniques that I've only been researching and trading myself. There's going to be an emphasis on identifying a bear market before the crowd does. Because let's face it, by the time most people identify that we're in a bear market, it's usually too late, right? Think of 2020, the last time we went into a really strong, sustained downward move. By the time you figured out that, boy, this is really bad, it's kind of too late. You've already lost so much. You're figuring, okay, I guess I should just hope and pray that it's going to go back up. And then when you can't take it any longer, you sell. And most likely that's when it starts to go back up, right? So we just don't know how to deal with these scenarios, all right? We're going to have also an emphasis on how to protect your long-term investments. I know a lot of you aren't traders, but guess what? If you have a long-term investment, this can help you just as well. It can help you decide to exit or maybe move stops or maybe exit a portion of your portfolio. We're also going to talk about scanning techniques. You can scan for these things I'll be teaching you so that you don't have to be looking over thousands and thousands of charts. You can actually just scan for them and you'll see availability if they're taking place, okay? This all comes with educational correspondence. You'll be able to contact me whenever you like questions. This is even after the live class, okay? Remember, this is an early warning trade system. This is something you have to prepare for because usually, as I just said, by the time we get into a bear market and you realize it's a bear market, it's far too late. So as you just saw, everything I just shared with you were chart examples taken from our platform. So we're going to throw in an extra bonus. If you decide to sign up for the masterclass, we're going to throw in a full year of the platform absolutely free, 12 months. You're going to get all of the different ways in which we have already standard on our platform, so you can use them, and many of the techniques and things applied in our masterclass you'll be able to use on the platform just with the standard version as well. All right, so let's break it down. Remember, two-part live course, things never seen or taught before. We're identifying a bear market before the crowd does. We want to protect your investments as well as find out ways to actually trade this bear market. Now, usually our master classes they're expensive because we go into detail about a specific category, anywhere from $5,000 to $10,000. So the two-day bear market course is roughly about $5,000, $49.95. But we're going to discount that, an early bird discount down 10%. So the early bird price is $44.95. You're going to save $500. Remember, that also includes the 1-year free platform. That's like $1,000 or so already that we did include. So it normally would be close to $6,500. Now, here's the best thing about this. We realize $44.95 is still a lot for someone to come up with. So for a limited time, we're also offering payment plans. That means you can contact Pro Trader Strategies, put together a payment plan for a small deposit, nowhere near $44.95. You can be up and running and just establish a monthly payment, and you can still be in the first class. So you don't have to worry about coming up with $44.95. You can still establish a payment plan with Pro Trader Strategies, and you can be up and running and in the first live class. Remember, everyone is a genius as long as the market's going up. The last 2 weeks, I can't tell you how many people I've heard, oh gosh, I called this, I'm making so much money. What happens if it stops tomorrow and it just goes straight down, okay? Are those things that made you so much money the last couple of weeks, the last month, are they gonna work anymore? You have to be prepared. I'm not saying it's going to happen. No one knows when these bear markets will happen, but we do have an early warning system that gives us a warning or alert that there's a high probability they may, and that's what you need. And I live here in California, and I would love to know if we had an early earthquake warning system, the way they have for tornadoes or other things around the United States for other natural disasters. But instead of being woken up at 12 at midnight and having the house shake, I would love to know a day in advance that there's a high probability there's going to be an earthquake in the next 24 hours. It's the same way with the market. Wouldn't you like to know in advance that most likely there's going to be a sustained downward move? But everyone is a genius as long as the market is going up. So what you need is sound fundamental education to help you when the market reverses. So will you be ready when the next bear market occurs? Could be next year, could be next week. Become a member of the 2-day bear market course in our masterclass series, and you'll really take your trading to the next level. Okay, here's how to take advantage of this. Contact Pro Trader Strategies. I developed the course with them, all of our master classes, and I developed the platform with them. You can reach them at trading@protraderstrategies.com. That's their email address. I would highly suggest, if you're interested in getting a payment plan quote, to call them directly at 310-598-6677. They have trading consultants on the phones. They'd be happy to give you a quote. There's no obligation, so don't feel pressured at any way that you have to purchase it. They would be happy to give you a quote and have you think about it. But remember, this is the early bird special. You want to take advantage of this. If you're on the fence, think about it for a while, but take advantage of this because most of our classes sell out, especially the master classes. And then by that time, it's too late. So the link you see at the very bottom is the link right here that will take you to the info page as well as the sign up page if you'd like to sign up online. I don't believe that link is live, but a live link has been posted on the chat box. So you will be able to just click that on in the chat box if you'd like to go to the page. Okay. Now I'm going to leave this information up here. I promised I would answer questions at the very end. So if you have questions concerning our masterclass or exactly a little bit more information about what we'll be teaching, please feel free to ask me now. Just go to the chat box, type them in, and I'll answer it to the best of my ability. Someone is asking, how long are the classes? Well, as I said, we haven't determined the actual format yet as to how we're going to structure this. This could be a 2-day course where we take section 1 in day 1 and section 2 in day 2, or we could decide to have a long Friday or possibly a Saturday and cover section number 1, and it would take maybe an hour or 2, and section number 2 would take an hour or 2. Okay, but that may a lot of times we've done that before. And the only problem with that is it takes a lot of someone's time. They don't want to devote 4 hours where they could be trading or maybe have to work. And also after 4 hours, my voice is usually shot, so it's not that strong at the end. So the teaching doesn't come across as strongly as it would if it were broken up into 2 days. So we're still deciding. But someone is asking also, how long are the individual sections? Most likely, like I said, anywhere from an hour to 2. Okay. Will they be recorded? Yeah, we record all of our colleges, all of our courses. So if you cannot attend the live class, don't worry, you will be sent a link to this recording, just like we're doing right now with this webinar. But where this webinar is free for anyone that wants to see it, our master classes and our colleges are only for the people that are in the college or in the master class. So no one else will be getting these other than yourselves, okay? When you say that's educational correspondence. Yes, I didn't say correspondence like we'll be corresponding with each other. Educational correspondence just means if you have a question, whether it's during the classes or once the classes have concluded, you can always email me. You'll get my private email address. You can contact me whenever you like, and I'll answer most of your questions within the next 24 hours. Sometimes I answer them. Students are so surprised sometimes. They say, wow, you answered my question in 10 minutes. I usually, with other classes I've taken, I have to wait a week before I get an answer. Well, sometimes, it's a little bit more difficult than others, but I like to get back to everyone as soon as possible. And your questions and emails come directly to me. So there's no reason to worry that anyone else is seeing your emails, okay? They come directly to my email address. Okay, if there are no further questions, that's pretty much it. In a nutshell, we wanted, once again, to present this masterclass. We present a masterclass course roughly about once every 3 years, okay? And as I said, in the past, we've covered and talked all about entries. We've talked about all about trend trading. And in this particular one, we don't want to talk about bear markets because we really have not gone into a sustained downward move. And by that, I mean, what I experienced, markets in 2000 going down 2 or 3 years, in 2008, 2 or 3 years. So we haven't seen that in a long while. And it's one thing I've learned, the longer time period in between those sustained downward moves, the stronger the downward move will be. So we've seen a number of months where we're in a bad market, but we've never seen anything that bad. So I'm not saying it's going to happen, but wouldn't you like to have an early warning system? Just the same way I'm not saying for other people who live in California, we're going to have an earthquake tomorrow, but wouldn't you like to have an early warning system that one was about to take place? This is the beauty of this masterclass, okay? So if you want to take advantage of it, become a student of mine, contact Pro Trader Strategies. Once again, they're very flexible. There's absolutely no obligation. They would be more than happy to take your order over the phone, or at least just give you a quote for a payment plan setup so you can think about it, see if it meets your needs, okay? Okay, as we conclude, I just want to take one last look at our disclaimer. Thank you so much for taking time out of your Wednesday. I know you had other things you could have been doing. I appreciate taking time out of hearing me speak, but most especially, I look forward to you becoming a student of mine in the 2-day live masterclass that's going to be happening very soon. And I look forward to all of you becoming students of mine in the bear market course. Thank you so much. Have a great day. Have a great week. And I shall see you next time. Bye-bye.